Klarna Warren Buffett-Style Stock Analysis, September 2025. Step 1. Business Quality and Economic Moat. Company Name and Ticker. Klarna, NYSE, KLAR. Post-IPO, 2025. Business Model. Simple description. Klarna is a Swedish fintech company and a global leader in the buy now, pay later BNPL sector. Its core business is to provide consumers with flexible payment options at checkout online and in-store, allowing them to split purchases into interest-free installments or defer payment. Klarna pays merchants up front and collects from consumers over time, assuming the credit risk. Over time, Klarna has evolved into a broader financial platform, offering banking services, a shopping app, a debit card, and marketing tools for merchants. The company generates revenue primarily from merchant transaction fees, consumer fees, late interest, interest income, and advertising affiliate revenue. Is it easy to understand? Yes, Klarna's business is straightforward. It facilitates consumer purchases by offering flexible payment options and charges merchants for the service, while also earning from consumer fees and financial products. Economic moat. Durable competitive advantage. Klarna's moat is narrow but defensible and is built on several pillars. Scale and network effects. Klarna serves over 93 million active consumers and 675,000 plus merchants in 26 countries, creating a self-reinforcing network where more merchants attract more consumers and vice versa. Proprietary technology and data. Klarna's AI-driven underwriting and risk management, powered by vast transaction data, result in industry-leading credit performance and operational efficiency. Low-cost funding. Klarna's banking license allows it to fund loans with consumer deposits at a lower cost than non-bank competitors. Brand and consumer loyalty. Klarna is especially strong among Gen Z and millennials, with high repeat usage and strong brand recognition. Product diversification. Klarna is expanding beyond BNPL into banking, advertising, and super app features, reducing reliance on any single revenue stream. Summary: Klarna's moat is not unassailable, given intense competition and regulatory risk, but its scale, technology, and cost structure provide a real, if narrow, competitive advantage. Management competence and trustworthiness. CEO Sebastian Semiatkowski, co-founder and CEO since 2005, is widely regarded as a visionary leader who has steered Klarna through rapid growth, international expansion, and product innovation. Executive team includes experienced leaders in technology, finance, and marketing, with backgrounds at major global firms, for example, HSBC, GE Capital, Vodafone. Board features high-profile investors and executives, for example, Michael Moritz of Sequoia, Omid Kordestani, ex-Google, Twitter. Capital allocation. Klarna has raised nearly $6 billion, executed a successful IPO, and invested heavily in AI and global expansion. Insider ownership. As a recently public company, insider ownership is significant, with founders and early investors retaining meaningful stakes. Summary: management is experienced, visionary, and has demonstrated adaptability and innovation. No major governance red flags are apparent. Step 2. Financial health check, 2024-2025 data. Intrinsic value estimate not directly calculable due to volatile earnings. Using a conservative DCF with slim margins in 10 to 12%, discount rate would likely yield a value near or below current price, given execution and regulatory risks. Margin of safety low, current price likely at or above conservative 4. Summary: Klarna's valuation is much lower than its 2021 peak, but still reflects optimism about future growth and profitability. The current price does not offer a clear margin of safety by Buffett standards, given the lack of robust, consistent earnings. Step 4. Long-term outlook. Industry trends. BNPL industry is growing rapidly. Global BNPL payments are projected to reach $560 billion in 2025 and $911 billion by 2030. CAGR 10.2%. User adoption is strong, especially among Gen Z and millennials, but growth is moderating as competition and regulation increase. Regulatory scrutiny is rising. New rules in the US and UK require stricter credit checks, transparency, and consumer protections, increasing compliance costs and potentially slowing growth. Competitive position: Klarna is a top global BNPL provider with strong brand, scale, and technology advantages. Faces intense competition from Affirm, Afterpay, Block, and PayPal, all of which have deep pockets and large user bases. Klarna's banking license, AI investments, and global reach provide some insulation, but the moat is not unassailable. Reinvestment opportunities: Klarna is reinvesting heavily in AI technology and global expansion, especially in the US. New products, Klarna Card, super app features, advertising and strategic partnerships: Walmart, Stripe, JP Morgan offer growth avenues. The company is diversifying revenue streams beyond BNPL, which could support long-term growth if executed well. Step 5. Final Buffett-Style assessment metric: Buffett Standard Current Value Pass. Understandable business: yes. ROE greater than 15%, greater than 15%, approximately 1.2% proxy. No. Debt equity less than 0.5, 0.5, likely greater than 0.5. No. Consistent FCF: yes. Improving. Not robust. No. PE reasonable: yes. Not meaningful. No. Margin of safety: price less than 4. Low. No. Trustworthy management: yes, yes, yes. Overall verdict. Klarna is a global fintech leader with a simple, understandable business model, a narrow but real economic moat, and a visionary management team. However, it does not currently meet Buffett's strict financial health criteria. Return on equity is far below 15%. Debt levels are likely above the conservative threshold, and free cash flow is not yet consistent or robust. The company's valuation, while much lower than its 2021 peak, does not offer a clear margin of safety, given the slim and volatile profitability, ongoing regulatory risks, and intense competition. Bottom line: Klarna is an innovative, well-managed company with strong growth prospects and a defensible position in a rapidly expanding industry. However, it does not currently qualify as a classic Buffett-style investment due to its low profitability, leverage, and lack of a substantial margin of safety. Investors seeking a Buffett-style wonderful company at a fair price should wait for clearer, sustained profitability and a more attractive entry point.